Hello everyone, today we are talking about a very important topic when it comes to your homeowner's insurance policy. We are going to talk about the difference between ACV, actual cash value, or RCV, replacement cost value. There are huge differences between these two coverages, and if you have a homeowner's insurance policy, you have one of these. So watch this video, figure out the difference between the two, and then go and check your homeowner's insurance policy to make sure you have the correct coverage. But before we go on and talk about the differences between these two coverages, we need to talk about two types of property that are generally insured under a normal homeowner's policy. The first type of property is your dwelling. This falls under the dwelling coverage. The dwelling is the actual physical structure of your home. The walls, the roof, the ceiling, the flooring, the cabinets that are permanently attached to the structure of your home, all of those things make up the dwelling, which fall under dwelling coverage. And the second type of property is personal property. That's all your stuff that you own. Your computers, your TVs, your furniture, your clothes, your toys, both yours and your children's, everything that is not part of the physical actual structure of your home, for the most part, falls under personal property. So keep those two pieces of property in mind as we talk about the difference between ACV and RCV. Let's first jump in and talk about ACV, or actual cash value. Actual cash value will pay you what your property is worth right now, today. So it doesn't matter if you bought it 3 years ago and now it's only worth $500. That's what you're going to get. You're going to get what it's worth right now, today. Now contrast that with replacement cost value. And replacement cost value pays you what it would take to replace your old property with new property today. And if that doesn't make sense to you, I'm going to give you an example, and hopefully that helps break it down and helps you better understand. So let's just take an individual that lives in a home, has homeowner's insurance, and has $5,000 worth of electronics. He has some laptops, he has some TVs, some sound equipment, maybe some camera equipment. All of that is worth $5,000. This individual bought all of this stuff about 3 years ago. So let's give an example as to what would happen. Let's say somebody jumps or breaks in their house and steals all of it. I'm going to give an example as to what would happen first if you have actual cash value. If you had actual cash value and you were this individual, well, you bought all of that 3 years ago. You spent $5,000. As we know, electronics depreciate pretty quickly. And so the actual cash value, how much it's worth right now, 3 years later, is not $5,000. You're probably only going to say it's worth about $2,500. So if you have actual cash value, when you file a claim, the insurance company will come in and say, I'm sorry, you paid $5,000 for all of this, but today it's only worth $2,500. So here's a check for $2,500. Good luck going out and replacing all of this. You're not going to be able to replace all of that. So you're probably quickly realizing, oh crap, I don't want ACV, or actual cash value, on my homeowner's policy. Let's talk about this scenario if you had replacement cost value on your insurance policy. So 3 years ago you bought it, it was worth $5,000. Today it's not worth that much, but replacement cost value pays you to go out and replace that with new property today. So the insurance company is going to look at everything and say, yep, in order to replace all of this, you need $5,000. Here's a check for $5,000. Go out and replace all of it. Okay, that's a huge difference right there. You can already see replacement cost value, or RCV, is the coverage that you want on your homeowner's insurance policy. And now if we go back to the two types of property that we discussed, dwelling and personal property, it's important to point out that most every insurance policy, when it comes to the dwelling, is typically going to be covered on a replacement cost value, almost automatically. It's still important to check because there still are some pretty bad policies out there that would give actual cash value, but for the most part, all of them are going to be on an RCV coverage automatically. However, it's important to point out when it comes to dwelling and replacement cost coverage, even if it comes automatically, there are still some nuances and variances when it comes to that coverage. It can be broken down with a few additional options. First type is called extended RCV, or extended replacement cost value. What this means is you have RCV on your policy, but let's say for whatever reason your home burns completely to the ground and prices have changed, there's inflation, and even with replacement cost value, they're not going to be able to fully replace your dwelling. Well, if you have extended replacement cost, usually it comes with an additional 25%. They will give you above and beyond, they'll give you 25% above and beyond what your actual dwelling coverage was. So let's just make it easy. Let's say you have a home that's worth $100,000. It burns to the ground. The insurance company, because you have replacement cost value, is going to give you that $100,000. But for whatever reason, now it's costing $125,000 to repair your home. Well, if you have that additional extended replacement cost of 25%, suddenly now instead of $100,000, you have up to $125,000 to replace and repair your home. So that's the first one, extended replacement cost value. The second one is guaranteed RCV. So this means, yes, you need to tell the homeowner's insurance company everything about your house. They're going to say, yeah, the dwelling, let's just make it easy again, the dwelling coverage should be at $500,000. You agree to that, they agree to that. That's how much you're paying for each month in your home insurance premiums. Now let's say your home burns completely to the ground and prices, inflation, everything has gone up, and it's actually going to cost $600,000 to completely replace your home. Well, if you have guaranteed replacement cost value, that means they're guaranteeing to rebuild your home, your dwelling, at no matter what cost it costs to rebuild it. So you have that guaranteed. It doesn't matter if it costs $600,000 or $700,000 or $800,000. They are guaranteeing that they are going to replace your dwelling, and they're going to replace it like it's new. They're not going to try to use old parts or anything to that nature. It's going to be repaired and replaced as if it were brand new. So that's the two variances when it comes to replacement costs. We know now you want replacement cost on your dwelling coverage on your homeowner's policy, but there's extended replacement cost and guaranteed. Again, you probably want guaranteed to make sure that in the event something happens, you are completely covered. So that's on the dwelling portion. The personal property portion is not going to come automatically with RCV. A lot of times it will come automatically with ACV, and we know now we don't want that, because if something happens to our personal property, we want to actually be able to replace it, not just get a depreciated amount in terms of a check that the insurance company is going to send to us. So long story short, which is better? What do you want on your policy, ACV or RCV? Well, we know by now you want replacement cost value. You don't want to get shortchanged in the event that you had to file a claim and you need to repair or replace any property, whether it's your dwelling or your personal property. You don't want to be shortchanged. You want replacement cost value. You want to get a check from the insurance company to go out and replace everything with all new stuff so that you can be made whole again. Go and check. If you have a reputable agent, a reputable company, you hopefully already have replacement cost value on both your personal property and your dwelling coverage. It's worth it to go and check though. And here's the cool thing. If you don't have that, it's generally very simple and easy to go in and tell your agent or tell your insurance company that you want to add that. It's only going to add a couple dollars each month to your insurance premium. And then you can sleep easy at night knowing that if anything happens, you are going to be able to repair and replace all of your personal property and just continue on in your life like nothing ever happened. As always, thanks for watching. If you have any questions, please leave them below. More than happy to answer them. If you'd like me to make a video clarifying anything else on this topic or any other topics, happy to do so. Leave a comment below. Thanks for watching, and we will see you all in the next video.